Hello class. In this video, we will be recapping what we learned concerning Section 2041. Section 2041 deals with powers of appointment. And the property included under Section 2041 goes on Schedule H, Form 706. We are focusing in particular on Code Section 2041A, which relates to general powers of appointment made after October 21st, 1942. We will not worry about rules relating to pre-1942 rules, although one of the study problems dealt with the pre-1942 power. Code Section 2041A2 is the rule of inclusion. It is the value of any property subject to a general power of appointment at the decedent's death, or was subject to a general power that was either exercised or released by the decedent, and as a result of the exercise or release, left the decedent with an interest in property, which would be includable in the gross estate of a property owner under Code Sections 2035 through 2038. If someone who owned the property transferred it, and the property would be includable in their gross estate under Code Sections 2035 through 2038, then the exercise or release of the general power of appointment that creates the kind of interest that would have been includable in your gross estate under Code Sections 2035 through 2038, had you been the actual owner of the property, would be includable in the gross estate of the property owner. So let's look at the first illustration. So in this case, we have G, who has the power, is holding the power, and power is given to another power holder by the property owner, who is G. And what occurs when G gives the power to give property away to H, then H now has the power to give it to whomever he chooses. Well, if H can give that property to whomever he chooses, whether it be Ray or another person, it's going to be included in H's gross estate when he dies. We'll say it another way. So if I am given the power to give your property away to someone else, it's going to be included in my gross estate if I possess the power on my date of death. This holds true even though the exercise of the power is subject to what is referred to as a precedent giving of notice. So what's a precedent giving of notice? That means that the power does not become effective unless some event happens or some act is performed. With respect to a trust, any trust that is discretionary in nature gives the trustee a power of appointment. The trustee is given the power to give property away. However, with the trustee, no power is retained, as it's given to someone whose power is retained. How is power retained? An example of that would be, say, for instance, if you have a grantor who is also the trustee, we would consider that situation one where the grantor has retained power, because basically that trustee, that grantor, never gave up its power by assigning it themselves as a trustee. So under Section 2041A2, it's going to act on general powers of appointment. And to have it includable under Section 2041A2, it must be a general power of appointment. So an example of a general power of appointment could be, for instance, if a beneficiary has the power to evade principal to consume for himself. That would be considered a power of appointment. General powers of appointment basically gives the one holding it the ability to exercise the right to use the power for themselves. This is how you can distinguish the general power of appointment from other powers. If you exercise your general power of appointment for the benefit of someone else, you are considered as making a gift for transfer tax purposes. Dying with a general power of appointment means that the property for which was the property that was held makes you the owner of the property for transfer tax purposes. So let's look at the next illustration. Section 2041B defines a power as a general power if it is exercisable in favor of 1, the decedent, 2, the decedent's estate, 3, a creditor of the decedent, or 4, a creditor of the decedent's estate. And there are 2 primary exceptions with respect to the inclusion in the gross estate relating to powers possessed at death. The first is the power of appointment. The first exception is the power of appointment to consume or evade is limited by an ascertainable standard. You saw that a lot in your problems. Relating to health, education, support, or maintenance. In this case, it is a non-general power, which means it's limited, which also means that in general, we do not view the decedent as possessing a power and an owner of the asset, which would make it includable in his gross estate. If it is not a general power of appointment, again, then it is limited or a non-general power and is not includable in D's gross estate. Exception number 2, the primary exception number 2, relates to jointly held powers, where it can only be exercised in conjunction with someone else, or if it can only be exercised with the person who created the power. Similarly, if the person with whom you held joint powers with is a party that would be adversely affected, jointly held property with an adverse party, then it is not a general power of appointment. And that's illustrated somewhat here with D and C. So in this illustration, let's say that D can evade the corpus of this property, and D has a life interest. C is the remainder man. Since C is the person who would get the property, then C would be adverse to D, because if D did anything improper with respect to his invasion or his power, that would adversely affect C, which makes C an adverse party to D. And in this case, then D would not be considered as possessing a general power. Keep in mind that once you start deviating, I'm going back to this, from health, education, support, or maintenance, you run the risk of not having met an ascertainable standard, which means you could be at risk for inclusion in the gross estate. So you need to look at the words that are used. Again, it's the state law that makes that determination. For example, is happiness an ascertainable standard? That's covered in the problems. How is general happiness measured? Basically, we can't measure it. Typically, if the wording refers to support, as you'll see in the regulations, you should be okay. But there's litigation that may arise when you start using your own words and not the words used to define an ascertainable standard as defined by state law. So Section 2041A2 pulls into the gross estate property subject to a general power of appointment over property at the death of the decedent, and it's going into that decedent's gross estate. It also applies to powers that have been exercised or released. The exercise or release of the power is an affirmative disposition of the power that results in a property interest that would be included in the owner's gross estate under the pullback rules if indeed the person who owned the property had made that transfer, then it would still be basically in the gross estate for that person as a general power of appointment. Again, Section 2041A2 refers to general powers exercised or released during one's lifetime. So now we're going to go to Section 2041B2, which covers the lapse of powers. And it reads as follows. The lapse of a power of appointment created after October 21st, 1942, during the life of the individual possessing the power shall be considered a release of such power. The preceding sentence shall apply with respect to the lapse of powers during any calendar year only to the extent that the property which could have been appointed by exercise of such lapse powers exceeded in value at the time of such lapse the greater of the following amounts: A, $5,000, or B, 5% of the aggregate value at the time of such lapse of the assets out of which, or the proceeds of which, the exercise of the lapse powers could have been satisfied. So if the greater of $5,000 or 5% of the value of the property with respect to which the power can be exercised, such as the power of D, in this example or illustration here, to invade corpus to the greater of 5,000 or 5% of the value of the property. In this case, that power to invade the corpus will not be treated as a lapse of power for transfer tax purposes. And so this is relating to, they put a dollar amount on this, and they're saying that if the value that you can put relating to that exercise does not exceed, the greater of $5,000 or 5% of the value of the property, it's not going to be considered a lapse and is not treated as a lapse of power for transfer tax purposes. It is a lapse that's really subject to the extent of the value of the property up to $5,000 or 5% of the value as a whole, to the extent that it's exceeded, I should say. So keep in mind that a lapse is different from a release. A lapse means you didn't do anything. A release refers to an affirmative action. So that's it for Code Section 2041, and we will move on to going through all of the homework problems in the next section.